Welcome back to #Let's Chat, a real estate podcast. My name is Nathan Montgomery, your host. And today we're going to talk about one of the biggest milestones in somebody's life, and that's buying their first home. And honestly, the mortgage process can feel intimidating if you've never been through it before. The whole process can feel intimidating if you've never been through it before. So to help us break it all down, I've invited someone I've worked with for years, Jason McCloy of Cross Country Mortgage. Jason helps buyers navigate financing every day and has helped countless first-time buyers become homeowners. Jason, thanks for joining me.
Hey, good morning. Thanks for having me.
Yeah, absolutely. Well, let's jump in here and talk about why first-time homebuyers feel overwhelmed. So let's look at the big picture. Why do they feel overwhelmed by the mortgage process?
Great question. And first-time homebuyers is one of my favorite spaces to work in because that's really where what we do is so amazing.
It is. It's so fun.
And watching them, the fear leave their eyes is great.
Yes.
The biggest reason I think most people feel overwhelmed is it's just something we don't do all the time. You do it like once or twice in your life, most people.
Right.
So it's not something we're really accustomed to. You're hearing terms that you've never heard before thrown about, like pre-approvals and escrow accounts and debt-to-income ratios and PMI. And it just seems a little overwhelming. But when we break it all down and we really start to get them to understand everything, and it's all through just having conversations. I mean, that's what it all boils down to, is having simple conversations. The truth is that first conversation is really helping. When we talk to them, we're really trying to understand their goals and creating kind of a roadmap of where we're going to go and how we're going to get there.
Right, exactly. So they don't need to have everything figured out before they talk to a lender, right?
No, not at all. In fact, most people have none of it figured out, which I prefer. I prefer you to have nothing than come at me with, misinformed. From the Goog machine. Yeah, exactly. Precisely.
All right, so the first step is pre-approval, right? So what's the very first thing a buyer should do?
Get pre-approved.
Okay.
And that sounds very cliche, but it truly isn't that important. And I mean important in the sense of of all of the things I'm going to say today, that's probably the most important is just timeliness.
Yeah.
We always want to talk to a buyer 6 months before they talk to us.
Right.
Because we really want to dive into the credit if there's something that needs to be addressed, or if their assets have been moving around things, we want to address that there.
Right.
So really, them going online and going to www.mortgagepreapproval.com is not ideal for a host of reasons, but one of the biggest ones being that when they do that, they might be getting a pre-approval or a pre-qualification that they think is legit, and when indeed it's not.
Right.
I think when you have a local person that you're working with that you can see and touch and hear from, that makes a big difference. But what we're doing, a true pre-approval, so there's three different types. There's in the world of getting ready to buy a home, there's pre-qualification, pre-approval, and loan commitment. We offer all three, of course. The pre-qualification, we really don't offer that much of, though, and we kind of steer people away from that because that's written on a bar napkin.
Right, exactly.
A pre-approval is where we really like to be, and most buyers should be, and that's because we're looking at their credit, we're looking at the income, we're looking at the assets. And so people say to me, I don't have my pay stubs day one, or I don't have my bank statements day one. Of course you don't. I mean, most people wouldn't. Right. But we have some really neat technology these days that we can employ that does third-party verification. So we can get their assets verified with their permission, of course, through their bank. If the bank participates, we can also go ahead and most often we're getting their employment verified, so their income is integrated right into the application. And those integrations of those third-party tools is important because one, it lets us know this is legit, this is from the source, it wasn't tampered with or in any way changed.
Yeah.
But also for the buyer, it's less documents for them to bring because if that works, I don't need you to bring me bank statements. I don't need pay stubs. I don't need W-2s. All of that's eliminated.
Right.
So it does a couple different things, but that's really
incredible technology to have.
Yeah, and then by the time you finish that pre-approval process, and I've gotten flack in the past for taking a little longer than others.
Sure.
I'm the loan officer who's going to be a little more pragmatic and take my time, because before I issue that pre-approval letter out to my real estate professional friend or my referral partner, I need to know that it's legit, that it's going to hold itself, because my name means something to me, and I want my customer and my real estate professional to know that this is legit, this is the real deal, and you are pre-approved.
Right.
So when they leave that pre-approval process, and it's usually done through the web application, some phone calls, things like that, but when they're done with that pre-approval process, they really understand what their payment's going to look like, what type of house they should be looking at, how much cash they're going to need, and things like that, so that we can address those. When you're out there showing them the house, I can help them navigate, like we can already kind of dial in where they really want to go. So
yeah, definitely. And I think what you said a second ago about getting with a lender even 6 months before they're ready to start, like that's something I've said to so many people when they're like, I'm thinking about it, but it's probably going to be a year. I'm like, hey, talk to a lender now, because they can help you get on the path to be ready to go when that year's comes due. And I've seen it work for so many people that have actually taken that advice, and they're ready to go, and they were able to go right into the house that they wanted.
And there are some times where, like that I mentioned, the third type was the commitment, loan commitment. There are times where, I think I'm pretty smart, but there are very complicated tax returns that I see, or there are very complicated situations that we might encounter.
Yeah.
That loan commitment part is cool, because we get to send it in, we get all the documents from the customer as if we already have a property identified, but in this case we don't. So it's a TBD property, and we send in the income and asset documents to an underwriter, get them to approve it, subject to a subject property. And then so we're good. It's been through underwriting. We are good. That's almost like a cash offer to a seller, because they know that these people have already been through the gauntlet.
They're seriously ready to go.
And so then they just identify the property, we finalize title work and insurance and appraisal, and we're done.
That's incredible. So, I think that's a great tool to have in your tool chest as a buyer.
Yeah, and those can close very quickly. The average closing is about 30 days here in Florida. But on those, when we have the loan commitment and everything, and they're just going out to pick the property, we can close in like 8 days.
Yeah, that's incredible. That's incredible. Yeah, which for some sellers, that's a huge asset, because they're ready to move on with their stuff too.
Yeah.
So that's huge. So how long does that process of getting a pre-approval usually take, Jason?
I tell people to give me 24 hours or less. It just really depends if they're like, hey, we're really trying to make this offer in right now. I will move things off my calendar to work on that and get them an answer in an hour or two. But typically I say give me a day to really get it all in and try to formalize and structure the deal. But it can be done. It can be done in as little as an hour, but it typically takes me a few hours to review everything. Yeah,
which is great, and you feel more comfortable going out in the buying process, knowing that that's all taken care of. And hey, even though it took a day, that's a day that saves a lot of headache down the road.
Exactly. Yeah. I have people that in my industry that will pump out a pre-approval in 20 minutes.
Right.
And I'm like, but did they really do their homework? Did they really look at it? Because one misstep, I tell you, you can imagine it would be terrible for everybody.
Yeah. It can be a real mess later on. All right. So credit scores and some common myths. I hear a lot of misconceptions about credit. What is the biggest myth that you encounter?
I have to have perfect credit.
Yeah.
I hear that all the time. I have to have perfect credit to buy the house. And that couldn't be further from the truth. You do not have to have perfect credit to buy a home. In fact, most of my clients aren't anywhere near perfect credit. Right. And it depends on the loan type, right? So if we're talking about conventional, you're looking at a minimum credit score right now of 620. If we're going FHA, those are at a 550, which is pretty liberal. Yeah. And VA does not have a minimum. There's actually no minimum credit score. So that's kind of cool for our veterans and spouses of veterans. But yeah, most people qualify and buy their house with credit scores way lower than they thought they could.
Than you think is even possible. Yeah, absolutely. So what are some things that buyers shouldn't do before they apply for their mortgage? Great question.
So, and when we're in that credit vein, just for a second, it's don't go finance anything. Don't open any new cards. And sometimes it's like the most benign. They don't even think it's a thing, but it becomes a thing. I had somebody do teeth whitening, professional teeth whitening, and the dentist offered care credit. Yeah, and so they were like, "Oh, just finance it." Yeah. They didn't think anything of it. They weren't trying to do anything, bad. But it really created a huge headache, because then we were like, "Oh my gosh, this $3,000 bill that now you have broken down into payments," and it was a pretty aggressive payment schedule. It was like to pay it off in 24 months. It was going to be too much. It sent their debt to income ratio too high. So don't open any new credit, whether it's for teeth or for cars or for furniture. Don't do it. Right. Don't quit your job. That's a big one. And that sounds so basic. Right? Like, who would quit their job? You would be surprised.
People do.
And they don't think about it. They think, okay, well, I've got this other job lined up to start next month.
Sure.
I can go ahead and quit, take a few weeks off, and take the kids to Disney. No, because we have to have that verification of employment all the way until closing.
Right.
So it's important. Just don't. And then the biggest one is around the assets piece is don't have any large unexplained deposits.
Sure.
And again, sometimes it's so like they don't even think of it. They go, oh, well, I had this money sitting aside, or I cashed in a coin thing, or I sold something. And you can do all of that. You can sell personal property for funds for your closing, and we could get all into that, but we won't today.
Right.
But just talk to your lender and don't do anything outside the norm. You really want to keep everything at the norm that you can.
Right. Absolutely. Well, and I know that some people have even done things like financing furniture for the new house, thinking, well, I'm not going to pay on it for 3 years, so it's okay to do that. And you just opened up credit, and now you've potentially damaged the ability to buy this house that you're under contract on. So it's important to just really stay away from anything. Just stay normal, like you said. Just keep it as normal as possible.
And I'll tell you, in that space, so, a real life example. This was a real life example. Mm-hmm. So when I say that the online lender is going to do it in 20 minutes and pump out that pre-approval letter, did they look at the inquiries on the credit report?
Right.
Because that is critical. Like let's say that you did not look at the inquiries on the credit report, and we've had this happen. And one of those inquiries was from Ford Motor Credit or whatever.
Right.
Because the client just went and bought a new car.
Right.
They don't think to tell you that they bought a new car because they think it's already on their credit.
It's done.
Right. They left the dealership in their new car. They're happy, and they came and saw me. And I have to be the one that says, what was this inquiry? And they say, oh, it's a new $500 car payment for my new Mustang or whatever. And I go, whoa, that is not appearing on your credit report yet.
Yeah.
So we have to have it added to your credit report. And now there's a $500 bill each month going out. That's going to change what you could qualify for potentially. And so those little things, it seems like a little nuance, but that has a huge impact on the file. So those credit inquiries are critical to look at. And most of the time we see it's just them shopping around to other lenders. Mm-hmm. And by all means, do that if you want to do that, for sure. But it's those ones that look like it could be a potential new debt we need to really hone in on and go, hey, just... And they're not. Oftentimes, people are not trying to hide that from you. They just don't think to tell you because they think, "Hey, I'm already in the car, so they must be reporting it."
They must know it already. Yeah.
So.
Well, and that's where even communication is key too. Just making sure that you're communicating and being as honest as possible with your lender and your realtor because it affects things. So, what's the best thing someone can do when it comes to credit score?
Like I said, the biggest thing is just keeping everything as it is. In preparation, excuse me, it depends on the timeline we're working within. Mm-hmm. If it's an immediate closing that we need to rock and roll, we have a thing called a rapid rescore where we could have them pay down something or do something. We have some simulation tools that are really cool, and we like using those when we need to. But if it's one where we're talking about 6 months down the road, 9 months down the road, then we can actually create like a roadmap with them and say, okay, pay down this, do that. Don't move all your money into this bank account and leave it there.
Yeah.
And I tell people that oftentimes with our banks, like I bank at a large bank here, and you can go in and have an account separate from your main account, and it's like you can do it for free or whatever. So you just go in and you put house account. And then you start putting your money in there, and then that is just for your house. Right. It sounds silly, it sounds basic, but it works. And
it's like the old envelope system, but doing it virtual now.
Yeah. So it's just putting that money in there and knowing that that's your little nest egg, that's your thing for closing. Because sometimes it'll even come down to closing costs. Right. We'll talk about that in a little bit. But I just want people to know that they're set that money aside and be aware of it, so that you're not just throwing it into the abyss or something.
Right, exactly. So speaking of down payments and closing costs, so talking money now, how much does a first-time home buyer really need?
So first-time home buyers get special programs because they're a first-time home buyer. And the federal definition is you have not owned a home in the last 3 years. Right. You haven't owned a principal home in the last 3 years, I should clarify. You can have owned a investment property or a second home, or grandma left you a home and you're on the deed there. You're still a first-time home buyer if that was not your principal residence. Right. So not having owned in 3 years, you get some special programs. So what do those look like? Conventional, we can do as little as 3% down. Yeah. Which is pretty remarkable.
It's amazing.
FHA is 3.5% down, and VA is no percent down. Is no down payment required. So that's nice. So that's really, a big change because we always hear, what did we always hear that you had to have?
20%. And
20%.
And I still to this day, people will say that to me is, I can't get 20% together to buy a house. And I'm like, what are you talking about? Like, that's not the way it works.
And think about it, in our market, I mean, the homes here in Central Florida.
Oh yeah, forget it.
They're so expensive.
Yeah, there's no getting 20% together.
as a first-time home buyer, if you're walking around with that kind of money, like, hey,
we're ready to go.
you just don't see it. Yeah.
So let's say that. Let's say someone's buying a $350,000 home. They may not need $70,000 sitting in the bank, right?
Exactly.
Yeah,
I mean, if they have $70,000 sitting in the bank, we can go and do other cool things.
We can do lots of things.
Yeah. We don't have to just put that towards the house. But no, in all seriousness, there's a bunch of different ways that the money for your closing can come, that you can come up with that money. So when we say that your money for closing, it's comprised of two parts. You've got your down payment and you've got your closing cost.
Right.
And those can be, from a 401k. Those are monies that you can access. Most often, the 401k plans will let you, for the purchase of a principal residence, you can take the money out or take a loan against it. So that's really cool. But you can also get gifts, from family members.
Right.
People say, "Oh, well, I can't." You'd be surprised. I mean, if you told your mom or dad or grandpa or even brother or sister that you're looking to buy a house and stuff, you'd be surprised how many people may have the means to help you with that.
Yeah, and they will. And I did when I bought my first house. My grandfather was like, "Hey, I want to help," and I was like, "Oh my gosh, that's amazing!" And that's how we were able to do it.
Nice.
So you don't know what you don't know, until you tell somebody or ask them.
And then we do have access to down payment assistance programs. So that's where you've got, we do a lot with Florida Housing. Mm-hmm. They have several programs, and they range from like a second mortgage, a lien in the second position, to a silent second. They have that program, the Florida Assist, which I use a ton. And then you've got ones where it's a grant, a true grant, where the money's forgiven over 5 years.
Right.
So the first 5 years you live in the house, each year 20% is forgiven. So at the end of year 5, you owe none of that money back. There's different programs. That's just some of them. But there's plenty of them out there. So down payment assistance is always in our back pocket as well.
Right.
And then thinking about, other things, closing costs, sometimes we can get help there.
Yeah,
and
absolutely.
you know better about that than I do.
Yeah, absolutely. Yeah, the sellers can participate in helping get rid of some of that expense on that end. So once a buyer's under contract, what happens next, Jason? Or I guess I jumped ahead. I'm sorry. The house hunting process, that's what we're talking about. So once someone's pre-approved, start shopping, what should they expect from the finance side? And then we'll come back to that question.
Yeah. So once we get them pre-approved and we've shared with them, a good loan officer will share with them a loan summary or an estimate to show them what the cost breakdown is. And that's where we talk a little bit about closing costs and those fees. Here in Florida, there's things that are customarily paid for by the seller per our FAR contract, but not always. But those we integrate those in. And then, I can't tell you how many people I talk to that say, I don't want to call a realtor because I don't have to pay them yet. Or I'm scared I'm going to have to pay this money to have their services. And y'all are subject matter experts, so I get it. They think if they pay someone, now I had my refrigerator worked on, and before the people came to my house, they said there's a $175 fee before we pull up in your driveway.
Yep, been there before.
And I was like, oh my goodness, we do not charge that. So as a mortgage lender, I can tell you right now, we do not charge for the consultation at all. That is, our services are free.
Right.
And much the same way as a realtor, I think that most realtors are nice people. Will tell you like, hey, you don't have to pay me anything to ask a couple questions.
Right, exactly.
And then once you get into it, but typically in here where we live, I can't speak for anywhere else, but where we live, oftentimes the seller still pays the commissions.
Sure.
So there is no burden for that on the buyer. So they just need to be aware that you get to access this professional who knows their stuff, and you don't have to pay them a dime.
Right. Yeah, absolutely. Most of the time. Yeah, absolutely. And we talk about that when we do our buyer consultation. We walk them through that process and help everybody make sure they understand how that works now that things have changed.
But I'm sorry, your question was, what do they expect now? So now they're pre-approved, they're going for the house hunt. Here we go.
Yeah.
This is where communication becomes critical, and not just between me and the buyer, but me and you.
Right.
The realtor, the lender, and the buyer should all be. This is where group text is somewhat acceptable. I do not like a group text, but I will tell you.
They blow up your phone.
But property to property, it can be critical because, the taxes and insurance can vary wildly here in Florida from one neighborhood to another.
Absolutely.
This house was built in 1979. This one was in 2017. The insurance is going to be very different. The taxes are going to be very different. Just being mindful of that. Or if you have somebody who's oscillating between condos, townhomes, and single family, then you have the consideration of homeowner association dues. And I can't tell you how many times that's become a thing. But we want them to know as they're house hunting. I tell people, and I'm like, you're not bothering me. If you ask me to run the numbers on every single house you're going to view, then that might become annoying. But for the most part, if you're honing in on a couple of homes and you're like, hey, we really think we're going to get with Nathan and put an offer in, let me run the numbers on it. It takes a few minutes,
right?
And then you're going to go into it eyes wide open, knowing what
a lot
that
more
looks
comfortable.
Like. Yeah,
yeah.
Now you know what the monthly payment's going to be roughly. You know what the cash to close is going to look like, and it just makes everybody much easier.
Yeah, you can take a deep breath and take the next step in the process. So, what is the biggest mistake buyers make during the house hunting process?
I would say, we were just talking about, it's falling in love with a house before really understanding the payment of that house. And that's why, again, I can't tell you, some of my best agents, like yourself, are ones that they'll call me from the kitchen. They're literally ready to write an offer. They're like, we're going to make an offer on this house, or they'll call me from the car as they're sitting out in the driveway, and say, hey, we're about to make an offer. Can you run this real quick? And let me run it. And I go, okay, this is how much they're going to need. So the purchase price is only part of the equation.
Right.
And I think oftentimes people get pre-approved and they go, oh, I can buy up to
I can go all the way up to here. Yeah.
And not understanding that you can go up to there, but then are you going to be comfortable with that payment? Because that payment you're making every month, that's what matters.
That's what matters. All right. So when you get under contract and you're starting the process, they find the perfect house. What happens next? What's going on in the behind the scenes?
Now is where we shine. No, this is where the lender becomes critical. Critical is at this juncture. This is where the rubber meets the road. Because now we've got a property, we've got a customer who they've given us most of or all of their documents. Now is when it really goes. So now we're verifying that documentation, making sure that crossing our T's and dotting our I's. We're also ordering the appraisal. So the appraisal is where we're going to send a third party. They don't work for us. They're an independent third party that goes out and appraises that property to make sure it's worth what you're buying it for.
Right.
We're also reviewing title work. So there's another person in all of this, the title company, and you'll hear about that at some point. But the title company, we're reviewing that title work to make sure that you're getting clear title to your home and everything.
Right.
We're also confirming employment and assets all the way up until closing. So that's important to note. Don't quit your job a few days before closing. I've had that happen.
And don't buy anything.
Don't go buy a
Please
Corvette.
Don't buy anything.
Yeah. But to your point, the furniture.
And
it seems so I get it. You want to put a new washer and dryer in your new house. I understand, but don't finance it. It's just please don't do it.
Yeah, please.
And this all takes about. So when I get the contract from the real estate professional, and we're ready to go, we're ready to rock and roll, and we're past inspections and everything. Then that's when it takes about 3 weeks from there to close. It's 3 to 4 weeks depending on the complexity of the customer and of the property, but usually it's 3 to 4 weeks. And this is where the lender's really earning their piece. This is where we're doing the heavy lifting, and this is where we shine. But this is where also people get tripped up because then it goes into processing and underwriting, and they're like, "What is processing and underwriting?"
Yeah, who is this now? So another person in the process. So speaking of underwriting, why do they ask for so many documents along the way?
It does feel that way, right?
Right.
So oftentimes, in a perfect world, we would have these digital tools, and the customer would employ them. Sometimes they do, sometimes they don't. Like my dad would never third-party verify his assets. It's not happening.
It's not going to happen.
It's not happening. But for myself, I'm like, oh, I could just put this in, and you get my banking information. Fabulous. So if they utilize the digital tools that we all have access to, then that makes it a lot easier right there.
For sure, yeah.
But if they don't, and they're like more old school or more analog, we would say, and they want to bring paper into my office, we can do that, and certainly by all means we will. But then we have to send that to the processor and the underwriter. They have to review it, and if there's any large deposits and or weird things with your income, like a pay stub that doesn't make sense, it's not sequential, or something happened. You'd be surprised at the little weird nuances that we have to look at because there's so much fraud out there. We know that for the most part, people are trying to do the right thing, but there's a couple of bad actors out there that make it hard for everybody. So that's why we're scrutinizing everything the way we do. But sometimes it just feels like it's so many documents because one begets the next. So we for example, we ask you, hey, what's this large deposit on your bank account? You say, oh, I had some stuff in my garage. I sold it or whatever. You go, oh, did you do a bill of sale? Well, actually, yeah, I did do a bill of sale. I go, oh, can I get a copy of the bill of sale? That will help me remedy this and tell the underwriter where it came from.
Right.
Well, and they paid in cash. Ooh, they didn't pay with a money order or a check? No, they paid in cash. It was a yard sale. Come on. So then you're like, okay, this has to make sense, and does it make sense? And how can you show us that you... So it starts to trickle, or... We'll get something as simple as a gift letter. Say mom and dad are gifting the kid $10,000 towards their new house.
Yeah.
But they forgot to sign the gift letter.
Right.
So then we have to send the gift letter back to them, and we ask them to sign it. Oh, but then they forgot to also date it.
Oh,
and so we asked them to sign and date it, but they only signed it and sent it back. So now we have to send it a third time for it to be dated.
Right.
So then people get so frustrated, and I get it. But we have to have on our side a perfect file. When we're done, these loans, mortgages in America go through such a scrutinized process. There are auditors that are just waiting to find something on there. Maybe not waiting, but they're doing their job and they're looking for any little thing. And so we have to provide a perfect product at the end of the day.
Well, and it's protecting everybody in the process at the end of the day to make sure that we're not getting people into situations that they can't ultimately afford to be in. So it's huge that you communicate and get those documents in as quickly as possible when you're asked. All right, so we go through the process. Everybody's asking for documents. The underwriter and you guys are asking for documents. We're getting to the end, and we hear this words clear to close. What is clear to close, Jason?
Oh my goodness, those are the three most beautiful words you hear in the mortgage industry.
For all of us.
Yeah, and you should see. I will text. I will. Well, first of all, I try to call, but if I can't get my realtor on the line, I text and I'm like, "We've got clear to close." I mean, it's just an exciting moment for everybody because that means that we're done.
Yeah.
That means that all the stuff is checked out, the income, the assets, the property, the insurance, all of it's done, and we're ready to go to closing. So.
That's such an exciting time. And that's when we will stop whatever we're doing to jump up and down a little bit because we've made it to the finish line for this person. So looking at some advice for first-time buyers, if you could give first-time buyers just 3 pieces of advice, what would they be?
3 pieces of advice. 1, talk to a lender early. You really want to engage with a lender early. Don't feel like you're bothering them. This is our job. This is what we do. Number 2, don't compare lenders solely on rate.
Yeah, great point.
People call me and they go, Jason, I really like you. I like your company, whatever. But so-and-so, www. whatever, has a better rate than you by this much. Just rate is important. Don't get me wrong. And it maybe 0.25% sounds like a really big deal to you, but getting you to closing on time with less headache and a better overall experience and just having someone who's going to communicate with you and execute for you, that's a bigger impact, I think, and changes the overall experience than just simply the rate. So we try to be the best rate, but we're not always. I mean, it's just the reality. And number 3 is, I would say, build a team you trust. And you're going to have your lender, your realtor, and your realtor partner is so invaluable. I'm not just saying that because I'm sitting across from one, but they really are, because your realtor has access to these other people, the home inspectors and the insurance agents and the financial advisors and all these other folks that you would not otherwise have access to. So, and we see that in first-time homebuyer situations. I mean, I'm sorry, for sale by owner situations where there's not agents involved, and they just wrote a contract, with the seller, and they're like, this is how we're going. They're so lost because they don't know all these pieces.
There's so much, especially if you're in an HOA or a condo, and there's so much that's required.
I couldn't imagine.
Yeah.
So have your dream team.
Get your dream team together for sure. What other things do you want to share with us before we wrap up, Jason?
I would just say, have a conversation. Don't feel like you're ever asking a dumb question. There is no dumb question.
Sure.
We only do this once or twice in our lives, most people. So it's a big deal, but it's not something that you're going to be an expert at.
Right.
That's why you have us.
Right.
There's no obligation. There's no pressure. If you decide, hey, I'm not going to buy a house. I decided to move to Bangladesh or whatever. You can do that, and I'm not going to have hard feelings towards you.
Right.
We even offer, one thing that I'd point out here is we offer a soft inquiry instead of just doing the old-fashioned hard inquiry on your credit.
Right.
We can actually do a soft inquiry and issue a pre-approval based on that. And that's really a nice thing because then it's not impacting your credit at all. Because I get that. People are like, I don't want my credit score to go down. We don't want it to either, trust me. But we can do those soft inquiries are a big win, I think, for the industry as a whole. But just talk to a lender. Call me, but you can talk to any lender. And I think that's really the most important thing I could impart on anybody. And then just keep your stuff clean, keep your documents organized and everything like that. And if you're doing it digitally, create a folder on your desktop and just put loan docs.
Just keep it all organized.
Dump your stuff in there. There you go. If you're doing it good old-fashioned paperweight, grab a folder and put those things in there and do it that way. But just be organized about it.
Yeah, keep it all together, and that way you can respond faster too. So, Jason, you're with Cross Country Mortgage out of the Space Coast. Where and how can they reach you?
So the bat signal is not working right now.
Smoke signals.
Yeah, exactly. No, they can contact me via my cell phone is the best way to get me day or night. That's 321-795-1417. That's 321-795-1417. Or they can go on my website. There's a lot of great information there, as well as my contact info, and that's at my www.jasonmccloy.net. That's JASONMCCLOY.net. And reach me there and go from there. And that's where they can even do their application if they're ready to do that. But we have a lot of cool calculators and guidebooks and things that are on there that are free of charge that I think people would really like.
Yeah, very helpful stuff. Well, Jason, thanks for being here today. All right, well, folks, this is #Let's Chat. I'm Nathan Montgomery with RLL Real Estate Group on the Space Coast, and you can reach me at 321-603-9710. Have a great one, and we'll see you next time.